Hey everybody, Economic Ninja here. I hope you're doing great. The 10-year bond just hit 3%. I gotta be honest with you, I'm pretty excited. You know, I said about a month ago that I believe that it was gonna happen really soon, and it just did. It hit 3%, the yield on the 10-year bond, which means mortgage rates are continually just skyrocketing right now. And I don't see any end in sight in the near term unless the Fed repositions and goes dovish. And that could happen, quite frankly. And honestly, I believe it's going to in the next few weeks, maybe 6 weeks. But let's just focus on what's going on right now, the data points, and a story that's out of Market Watch. And it's very interesting. And it's entitled, Foreclosure Filings Are Up 132% from a year prior. Here's what that means for the housing market. I'm going to link this story below. We're going to go over it a little bit. But first I want to say, this is absolutely historic. People are absolutely being priced out of the housing market, which means there's going to be less buyers now chasing these very few homes. So what we're going to see is a couple things. We're going to see inventory start to explode because the more and more doom and gloom that's going on in the markets as far as, headlines saying, the housing bubble, excuse me, 2.0 is here, housing has burst, the buyers are drying up. You're going to see people that have been on the sidelines thinking about buying real estate, they're now going to jump in and they're going to try and catch that top. But it's about to be a falling knife in a couple of different ways. Now, people are being priced out of real estate, but not for the same reason that they were being priced out of real estate back in November and the last year or so. Because back then they were being priced out because prices were rising and interest rates were staying pretty normal, pretty flat. 30-year mortgage was sitting anywhere between, let's say, at its lowest, it was like in the 2s, and then at its highest, it was sitting around 4%. So it was just fluctuating about 1%, right? But housing prices were going up because demand was going up because it was artificial demand because inventory was low, okay? I always gotta look behind me, see what jet's flying in. I'm right next to the airport. I love airplanes. So we have a situation now where it's pivoted. It's a pivot. It's not because home prices are skyrocketing, it's because home prices skyrocketed and interest rates, mortgage rates are exploding, okay? Now, I do believe that we're gonna see the 10-year yield get a little higher from here. It's gonna come down a little bit over the next week probably, and then it's gonna start to go higher. I believe, honestly, you're gonna see over 3% on the 10-year in the next few weeks, all right? That is gonna add extreme pain. Right now, we're pushing close to a 6-year, 30-year fixed mortgage, and that is absolutely astronomical. And you guys saw the story that I put out that adjustable rate mortgages since January have exploded. They've over doubled. And I've told you, and I mean it, you're going to see neg-am loans on the market pretty soon if this doesn't stop, all right? Negative amortization. I know what you're gonna say. It's not gonna happen again. They're not gonna do that. Yes, they will, because the market always wants to find a way to sell a house or sell a mortgage. And right now, with home prices not, coming down, and with interest rates skyrocketing, there's got to be a solution. It's either that or the government switches to a 40-year mortgage, which I've already done a video on that, and I believe that is also going to happen. If that happens, we're going to have to pivot into real estate because we'll see a pretty quick increase in real estate across the country of between 20 and 30%. I know that sounds crazy, but it really can happen. All right, so, and here too, I want to answer this because everyone's like, what are you, ninja? Housing's crashing, housing going up. Stick on one side. No, you're an idiot if you think like that. Wealthy people understand that they are not in control. The only thing that they are in control of is day-to-day decisions based off of perfect intel. What is happening in the world? What is happening in the psychology of the buyer, the public? And then what is the monetary policy of that given day or year going on? What are the tax implications? Things constantly change. If you think that you're gonna go put $1,000 into investment and wait until it hits $1 million and you're gonna walk away a millionaire, you're nuts. That's not how wealth works, all right? Okay, so let's jump into this story. Let's let this car go by. All right, foreclosure filings up 132%. It says right here, I'm just gonna briefly go through it. It says, when we were reading through real estate data this month, 3 stats caught our eye. The first, the number of active foreclosures. This is when the foreclosure process has begun on a seriously delinquent loan, but has yet to be completed and liquidated. It edged up by more than 7,000 in March. The first year-over-year increase in almost 10 years, all right? So think about that, guys. And another reason, too, that's helping that is because of the forbearance process, and that banks were really not allowed to foreclose as of last year, okay? They were only able to start the foreclosure process actively this last January, okay? So that is one reason, okay? So that data is a little skewed, but it is interesting. It's the first time that a year-over-year increase in foreclosures happened, and not since the last 10 years, all right? All right, let's see. And this came from out of Black Knight. Secondly, more than 78,000 US properties had a foreclosure filing during the first quarter of 2022, which is up 39% from the previous quarter and up 132% from a year ago. Now, again, that is because banks were not allowed to foreclose on homes because of the government forbearance program, all right? Now it says, the serious mortgage delinquencies, those 90 or more days past due, and that's when the foreclosure process really starts, is once 3 months of non-payment go through, then they start filing documents. Those are up 70%. They're 70% higher than they were pre-pandemic. Okay, so that is the important one right there. Pre-pandemic. Before the pandemic, there was no big forbearance rules that the government came out with. There was forbearance available to a lot of buyers, but or homeowners. But the point is that there is, before the pandemic, that was when, hey, you're 90 days or more delinquent, we're starting the process right now. That's the big number. Now it says, I'm going down here. All right. And finally, regarding serious mortgage delinquencies, though they are up since the pandemic, in March they fell 12% for the strongest single month improvement in 20 years. There are actually more than 1.2 million fewer serious delinquencies than were last March, Black Knight reports. Now, that's them putting this positive spin on things, and I want to explain that. So in the last year, we saw a lot of people in serious delinquencies because they were in the middle of the forbearance process. We were still, all shut down and all that kind of stuff. There were still a lot of questions. Since then, a lot of people have figured out that they can repair their loan with the bank by doing they changed their loan. And a lot of people went to a 40-year product, which saved them 50 to maybe a couple $100 a month. Really not a lot in the grand scheme of things when you look at how much now the amortization over 40 years as opposed to a 30-year mortgage, literally, they're now in bondage for another 10 years on their mortgage. And sadly, most of those people, now that they're able to keep their home, and that's great, they're stuck in a payment for 10 more years, and you're gonna see, because it started over again, the whole amortization. So if they're in the house for the last 5 years, they had 5 years paid off, if you think about that savings, that let's say $250 a month, that is, now you start over. The time clock starts again now for 40 years. You've lost that last 5, right? And on top of that, now that $250 in savings is now going to higher inflated goods like food, gas, car payments, things like that. So most people that change their loan into a 40-year, and we see all these great stats, like all these people were in foreclosure, now they're not. If you think about it, they're now even more of a slave to the lender, and that's what's scary. And I'm telling you right now, we are gonna see fireworks. So I know it sounds crazy because people are like, how can you get excited when people are gonna lose their homes? Well, I get excited trying to help people and wake people up like on this channel. And all of you guys sharing these videos, it's what made this channel such a success. But in the end of the day, you can only see so much eyes rolling and people going, yeah, whatever. You don't know what you're talking about. Hey, copy. I'll see you on the other side when I buy your house. And I'll be good. We're gonna be good landlords. We're gonna rent them back to you and we're gonna crush it. Just like in 2010. All right, guys, with that being said, I thank you so much for watching. The Economic Ninja is out.